midpoint of an order block, which has nothing to do with the depth of market or level 2 data, half of that candle is mean threshold. So half of a gap, like down here, is consequent encroachment. Half of a order block, whether it be the last up close candle prior to a displacement lower with a fair value gap, that's what makes this a bearish order block. Not simply because it's the last up close candle before a down move. There has to be signatures, an alignment that agree. And the midpoint of that candle is mean threshold. It means it's likely to draw up to this candle and as much as the midpoint. Now, what I'm interested in seeing is, do we trade through the mean threshold? Because if we do, I've had this annotated here. And while it was a volume imbalance initially here, failed it here. So now what's above these relative equal highs? Buy side liquidity. So buy side liquidity with a small little gap right there between this candle's high and that candle's low. So there's a potential draw for dollar to get up to here. I'm not stating unequivocally that it's going to go there. I'm watching to see throughout this week, do we see signs that it wants to continuously press up into this area? If it does, that means we have potential, not a guarantee, potential for lower prices in Forex, stocks, and stock averages. I want to see, do we get more indications that that's probable? Or are we going to hit this fair value gap complete closure here? And let me draw this out so you can see. So we have just a little bit left in there. And I want to watch and see, do we get a reaction and start to sell off a little bit? And if we do sell off, how far can it go? We have a breaker here. We have a low, high, lower low. So that up close candle in here, it can trade down as far as that, which would be around the 102.30 to 102.55-ish. Those two specific price levels.